At the end of June 2026, the U.S. Office of Government Ethics released President Trump's annual financial disclosure for 2025. It covers his first full year back in office, and the headline figure was at least $2.2 billion in income. To understand how big that is, you need the year before it. Back when he was a candidate in 2024, his disclosure showed a bit over $600 million. So in the space of a year, the year he moved back into the White House, his reported income roughly tripled. Now, the traditional businesses did fine. Revenue at the golf courses and resorts rose about 15% to more than $500 million. Mar-a-Lago alone brought in $77 million, up from $50 the year before. Licensing the Trump name to overseas property developers, especially in the Middle East, added another $52 million. Those are big numbers, but they're rounding errors next to the main event. According to the disclosure, more than $1.4 billion, well over half of everything he made, came from crypto, digital tokens, and related ventures. Presidential historians were blunt about it. There is no clear precedent in American history for a sitting president's personal wealth growing on this scale, this fast, while in office. So the obvious question is, how do you make over $1 billion in crypto in 12 months? Let's follow the money. January 17th, 2025, 3 days before the inauguration, a new token appears. It's called Trump. Officially, it's a meme coin, a type of cryptocurrency with no product, no company, no earnings behind it. Its entire value comes from attention and hype. And the person who could supply more attention than anyone alive promoted it directly on his own social media, telling followers to grab their Trump coin. They did. The token exploded from under $1 to more than $73 within days. And then it did what meme coins almost always do. It collapsed. Today, it trades more than 96% below that peak. One analysis estimated retail buyers lost billions of dollars in aggregate on the way down. Here's the mechanism, though, and it's the key to everything that follows. When a company creates its own coin and sells it to the public, that's called an ICO, an initial coin offering. Think of it as the crypto cousin of an IPO, except instead of selling shares in a real business, you're selling tokens you conjured into existence at almost no cost. Trump-affiliated entities controlled the large majority of the Trump token supply and collected fees on the trading. Estimates put the take from the coin and its fees in the hundreds of millions of dollars. So sit with the shape of that deal. The insiders manufactured an asset for next to nothing and then skimmed a fee from every single trade in it, whether the price went up or down. Their own 80% stake was locked up for years, so this wasn't a case of selling at the top. It was more like a toll booth on the frenzy. Meanwhile, the crowd that bought the hype was left holding a token worth a fraction of what they paid. Create something out of nothing, monetize the attention around it, and let the public carry the losses. That's the pattern to watch. The meme coin was the warm-up. The bigger machine runs on a second token called WLFI. It starts in 2024, when the Trump family launches a crypto company called World Liberty Financial. The people running it are Donald Trump Jr. and Eric Trump, alongside Zach Witkoff, the son of Steve Witkoff, a longtime Trump friend, and now his special envoy to the Middle East. Let me walk through it slowly, because it's designed to be hard to follow. Step 1. There's a small, little-known company listed on the Nasdaq called Alt-5 Sigma. Originally a payments business. In 2025, World Liberty takes a controlling stake in it. But it doesn't pay in cash. It pays, substantially, in its own WLFI tokens, handing over around $1.5 billion worth of a coin it created. Step 2. Alt-5. now steered by World Liberty insiders, announces it's going to raise real money to buy even more World Liberty financial tokens, turning itself into what's basically a holding tank for the token. It raises $750 million in cash from outside investors, including serious names like the hedge funds Point72 and Exodus Point. Step 3. That $750 million in cash flows into buying World Liberty financial tokens. And according to the terms, the Trump family is entitled to about 75% of the proceeds from World Liberty's token sales, which works out to roughly $500 million going toward the family after fees. So strip away the jargon, and here's what happened. You create a coin. You use that coin to take over a public company. You have that public company go raise genuine cash from investors, and that cash gets spent buying your coin, which means it ends up flowing to you. Real dollars in, a self-issued token out. And the people left holding the token? World Liberty financial token has since fallen around 70%. Alt5, the Nasdaq company, has rebranded to AI Financial Corporation, and its stock is down roughly 93% from just before the deal. The insiders got cash. The outside shareholders got paper worth a tenth of what they put in. Now the part that turned this from a business story into a Washington investigation. A lot of the money flowing into World Liberty came from abroad, specifically the United Arab Emirates. A UAE firm connected to Sheikh Tahnoon bin Zayed Al Nahyan, the country's national security advisor, took a large stake in the venture. And separately, a state-backed Abu Dhabi fund called MGX, which Tahnoon chairs, made a $2 billion investment into the crypto exchange Binance, a deal denominated in World Liberty's own stablecoin. That single transaction routed enormous value through a Trump family product. Then, some months later, the Trump administration eased U.S. export controls on advanced AI chips to the UAE, clearing the way for NVIDIA's most powerful processors to flow to Emirati firms, including one tied to Tahnoon himself. To critics, that sequence looked like cause and effect. Senator Elizabeth Warren called the chip provision corrupt, and she and Senator Alyssa Slotkin asked federal inspectors general to investigate whether officials, including envoy Steve Witkoff, whose family co-founded the very same crypto company, crossed ethical lines while foreign money and U.S. technology policy moved in the same direction. In fairness, that's an allegation, not a proven fact, and the other side pushes back hard. World Liberty Financial has flatly denied any link, calling the claim that coin sales were tied to chip policy false. And the president has said there was no conflict of interest at all, that he doesn't even speak with the people managing his money.
Were you know about the crypto ventures? So that was just something.
By the way, I could know about it. I didn't.
Right.
I mean, there's nothing illegal. There's nothing wrong with it. I could know. I'd tell.
So step back and look at the whole picture. In 1 year, a sitting president's reported income more than tripled to over $2 billion, the majority of it from an industry his own government oversees. Now, there are two honest ways to read this. One is the president's own. None of it is illegal. He isn't bound by the usual conflict rules. He doesn't manage the money himself, and asset prices simply rose. The other reading is the one that's driving congressional letters and inspector general requests. That the office of the presidency itself has become something that can be monetized. That when foreign funds, market-moving posts, and a family crypto empire all point in the same direction, the line between public duty and private profit stops being visible. What almost no one disputes is the novelty of it. There's no real precedent for this. Not the scale, not the speed, not the machinery. And that's the uncomfortable question this 927-page document leaves behind. What happens to a country when the highest public office and a private fortune become this difficult to tell apart? Because once that line blurs, it's a very hard one to redraw.